Hello, Cheers to Business listeners. I'm Ashley Smith, Vice President of Wholesale Pharmacy for DocRx and listener of Cheers to Business. And I want to tell you about the great company I work for. DocRx is a family-oriented company dedicated to tailor operational solutions for patient health and compliance programs that increases the quality and efficiency of patient-centered care, and always with the mission of the patient's health first. With over 10 years of experience helping doctors and their patients with diagnostic tests, patient monitoring, medical supplies, compliance, wholesale pharmacy, physician dispensing, billing, and much more. DocRx is your patient and health compliance solution, both under one roof. To find out how DocRx can help you, your hospital, pharmacy, physician's offices, and any PPE you need for your businesses, please visit us at docrx.com. That's docrx.com, docrx.com. Now enjoy the show.
You're comparing your business in a COVID time to a non-COVID time. The goal is to get the refund of the credit that should have come to them in 2020 for them today. So because of this change, you guys can go backwards into 2020 and look at your clients. Clients can look at their own books and see when they were closed, when they had reduced receipts. And in the times that they're eligible, they can receive a credit of up to $5,000 per employee for $10,000 paid in wages. I haven't seen a restaurant or a bar that hasn't qualified.
And anybody that was shut down and saw a reduction in revenue, at least check it out. Hey everybody, welcome to the show. Today we're talking about a topic that not many people understand, employee retention tax credit. But thank goodness this lady does. Ms. Tricia Petteys is the Chief Operating Officer of Payroll Vault Payroll Vault Franchising in Denver, Colorado. Hey, I'm Karen. I'm a former CPA, entrepreneur, business consultant with big ideas.
Welcome to Cheers to Business.
Tricia, thank you for being on the show.
No problem. Thank you for having me.
Well, the reason that I asked you to be on the show today was because this thing's come out and it's called ERTC because everything's initials, you know. And so employee retention tax credit. I don't think anybody really knows about this, but you guys have studied it immensely.
You know, we have. We were studying it last year when it came out because we saw value in educating our clients potentially about it. However, because so many people received the PPP loan at the time last year, it didn't seem like anybody would take advantage of it because they preferred the PPP loan. However, at the end of last year, the government came out and said, you know, if you got the PPP loan, you can also take advantage of the employee retention tax credit. So you can have both, which is really exciting. So what we have done is taken that education and brought it forward and are now talking to all of our clients and our communities about taking advantage of this credit.
What is it? What is it for?
So it is for businesses who in 2020, if they're under 100 employees, and if they were closed or partially closed, and partially closed even includes a reduction in business. And let me give you an example. If you have a restaurant who also say did some catering, and the restaurant, of course, was closed and maybe even partially closed. And then depending on where they were, say the restaurant could open, but they still couldn't do their catering business because you couldn't host big parties with a lot of people together, right? So that is still considered as not at 100% of business because they're still prevented via government order from operating in the way that they originally were operating. And then the second qualification, and this is an or, not an and. So if they were closed or partially closed, or if they had reduced receipts over 50%, so 50% reduced gross revenue in a quarter in 2020 compared to the same quarter in 2019, they could also qualify. And once they qualify at that 50%, they're qualified for every quarter following until they get up over 80% of gross receipts compared to the same quarter the prior year.
So if it went down in usually the second quarter was when the big hit was, right? Because we're going into starting in April. And so the second quarter you had more than 50%. So let's say fourth quarter, you found a way to pivot your business and all of a sudden you're making money. You don't get it for that fourth quarter if you're up to 80%?
If it took you until the fourth quarter, so say you're in October 15th, right? Like, so you had reduced receipts second, third quarter, then fourth quarter is that quarter that you went up, you still qualify for that fourth quarter because the fourth quarter is the first quarter that you got up over the 80%.
So if you had,
in that scenario, second, third, fourth quarter qualify.
all right, let's just say in third quarter, business starts booming. So many people reinvented their business and found a way to take it. I don't want to say take advantage, but just be smart about their business and make an income. Then if you got back to 80% of what you previously had, then fourth quarter wouldn't qualify. Okay, I got that part. All right, so if you were talking to someone that doesn't know anything about it, and pretend that's me because Katie and I are trying to figure this out. We're actually meeting this afternoon to look at some companies. And what is it in a nutshell? What are we doing? What's the goal here?
The goal is to get the refund of the credit that should have come to them in 2020 for them today. So because of this change, you guys can go backwards into 2020 and look at your clients. Clients can look at their own books and see when they were closed, when they had reduced receipts. And in the times that they're eligible, they can receive a credit of up to $5,000 per employee for $10,000 paid in wages. So if an employee had made $10,000 in wages in that qualifying quarter or that qualifying time in 2020, your client could receive $5,000 in credit.
What about, let's take a landscaper. They don't have a physical location, but maybe. And so, because they're going out to yards and their business is only down, say, 20%, but they're not necessarily closed down because it's not like a restaurant or bar. So they just don't qualify?
They wouldn't in the scenario. If in the state in question, if landscapers were deemed non-essential and the state had ordered them closed or to do, reduced services, then they would qualify. But if they were deemed essential, and I think landscapers were in a lot of states, you'll have to check by each state's rules. But if the landscapers were ordered closed by a government order, then they would. But typically, no, they wouldn't in that scenario.
Okay. Just trying to nail down where we're at. It's a lot. I mean, it really is a lot and complicated, of course. Now, is this stuff still changing? Are they still coming out with guidance on this like everything else?
Of course. So right now, they've gone kind of back and forth on a few things. We've gotten some clarification, but we're just keeping an eye on it and making sure that we're advising our clients as we go, as we get the different updates. Now, yes, it is a lot to consider, but what you and I just talked about was only 2020. 2021 is its own thing. So 2021, the requirements are closed or partially closed, like the year before. But if you have reduced revenue of just more than 20%, so before you had to hit a 50% threshold, 2021, you have to hit a 20% threshold, and the credits are higher.
Is that compared to 19 or compared to 20?
Yes, compared to 19. So 2020, you compare quarter over quarter for 19, and 2021, you're comparing quarter over quarter for 19. The goal being that you're comparing your business in a COVID time to a non-COVID time.
They took it out to 2021 and not limiting you to 2020. Now, can you do both? Can you go back to 2020 and redo those payroll tax returns to get the credit and do 21?
Yes, you absolutely can. It's because you have to qualify uniquely in each year. So if you're continuing to be partially, so restaurants are a great example, right? In almost every state, they're operating at, say, 25% capacity, 50% capacity in many states, right? So they're still considered partially closed. And so they can continue to take advantage of this credit. The credit limit for 2021 is $7,000 per employee for $10,000 paid in wages for first and second quarter. So it's a maximum so far of $14,000 per employee in 2021.
I have two things. One, an example of, let's say a restaurant, you're down to 50 or 25% capacity. So that means you're partially closed. All right. So you qualify on that. But what if you were smart enough to take your catering and go around to neighborhoods and sell out of the back of your truck or whatever, and you're only down 11%? Do you still qualify?
Yes, you do, because you're still not at 100% of the capacity of what you originally were before COVID. And you
Wow.
will be once the order is lifted. So the government order has restaurants at half capacity or, partially closed. And even if they were able to pivot, they're not able to go back to what they were. But once the orders are lifted, once we go back to regular life, then they can get back to their business. And how great that they have thought outside the box and really driven their business forward. And it could be that they could do both once these COVID orders are lifted, which will be great for them.
All right. Another example. This company happens to be very close to me. And let's say that because it was a statewide shutdown, so everybody goes home and works from home, and they may still be working from home and will continue that way. But because the government said, hey, stop it, you have to go home, you qualify?
If your business essentially runs the same and you have remote employees.
Okay, that cuts out one of mine.
Yes. Okay. So so you have office employees, they work on computers, you heard about this coming, the government did say, hey, everybody has to go home, but you guys basically just picked up your laptops and plugged in to Ethernet at home and started working from there, and you really didn't miss a beat and revenue is all the same, then no, you wouldn't qualify.
But if your revenue was down, how much could you qualify under that scenario?
In that scenario last year, you'd have to be down more than 50%.
See, it wasn't. I've got companies that aren't qualifying. It seems like it'd be so easy to qualify, and it's not. So restaurants just keep banging me in the head, and bars, that they would automatically qualify.
I haven't seen a restaurant or a bar that hasn't qualified.
Okay. All right. All you restaurant owners and bar owners out there, and anybody that was shut down and saw a reduction in revenue, at least check it out. Now, let's say somebody does their payroll on QuickBooks. They are not wise enough to use a payroll vault. Just saying. What should they do? Let's just say they have a tax person they go once a year to see. So they don't have an advisor. And they're doing QuickBooks themselves. They let QuickBooks do the payroll tax returns, or Gusto, or some one of those. Gusto's not touching this stuff. Some of the payroll companies are not touching this. Isn't that right?
That is right. We've heard that from a lot of people who are ringing our phones that aren't our clients. Payroll companies seem to be saying, figure out the numbers yourself and give them to us, and then we'll file your adjusted returns. But it's up to the client to do the math. It gets very, very complicated, and this is why. So you are able to take advantage of the credit if you received the PPP loan in 2020, but you can't double dip. So if you have your forgiveness window of the time that you received PPP money, you need to carve out the amount of your loan and the amount that you claimed for payroll. So you got a loan for $100,000, and 60% of that was claimed and went toward payroll for your PPP forgiveness. So you have to carve out $60,000 from the ERTC credit as far as those wages, because you can't claim the PPP wages and the ERTC wages in the same year.
See, that makes sense to me. You can never double dip.
Yeah, you can never double dip. But it does make sense. But when you actually sit down to do the math, for somebody who does their own payroll through QuickBooks or Gusto, they really are going to have to sit down with it and comb through the numbers. I recommend engaging with a professional to take a look at your payroll journals and the taxes paid and your PPP and your forgiveness window, because all of those things need to be considered while you're figuring out your credit.
I could see where people would just get in a lot of they could get in a lot of trouble. And not trying to do anything bad, just by calculating it wrong, and it backfires on them. All of a sudden, somebody's going to knock at the door and want their money back. All right, now I saw something interesting yesterday. You amend the 941s, which is a payroll tax return that reports the federal withholding, Social Security, Medicare, and those are filed quarterly. And so you amend that to get the refund, which is the tax credit. Now, what a lot of people don't realize is that a tax deduction is not a tax credit. A deduction reduces your income that you're going to be taxed on, but a tax credit is a dollar for dollar getting the tax back. Now, let me ask you this. What about me as an owner? Do my wages qualify?
At this time, yes. We are
I like how you say that.
I know. We are waiting for a hard line to be drawn by the IRS and the AICPA. But at this time, the tax attorneys and Other professionals that we've been talking to all point to yes, that owners are included. So at this time, we are including owners and spouses. However, other extended family members don't qualify. So if you have, say, a large family owned situation and you have a husband and wife owner, but they employ their children, the children aren't counted.
All right. Look at Katie and I, or me and my brother. We own businesses. And so me as the mom, Katie as the daughter. If Payroll Vault, Mobile, Baldwin County qualified, would one of our wages not count?
Well, no, because you're both owners. So in that situation, it doesn't count as the extended family because you are both owners. Now, this isn't across the board. There is a percentage ownership to consider. And so if somebody has that very specific situation, they're going to want to check out the IRS FAQs on that, because I'm not quite sure what that limit is.
Well, I looked at those FAQ, frequently asked questions, and last time I looked, there were 94 of them.
Yes.
That's insane. That means they don't know.
It is. And as of today, that February 24th, they're not updated. And there's a big ribbon across the top of the screen that says, hey, there's been some changes and we haven't updated these FAQs yet. And the biggest thing that hasn't changed is the PPP consideration. Because right now the FAQs say, if you got a PPP loan, you can't apply for this. And that's not right, because they have updated the law. They just have not updated the website. But generally...
Are you telling me that the IRS site is wrong? Imagine that.
Yes, they really are having difficulty just keeping up on everything, and they were closed for a long time. And they're just really behind in getting caught up on stuff. So just consider that as you're reading through the FAQs, and consult with a professional about what counts and what doesn't, and who qualifies and how owners work into the deal. And just make sure you're talking to your payroll professional about all of those things.
Now, Payroll Vault they use Friend Connect. And so it's a platform. Different franchises can go ask questions or give information, just a way to share information. And I saw where Melissa who has one in Hawaii, put out that what people don't realize is that when you amend your payroll tax return, and it's Form 941, that's key when you're talking to a professional, what you want done, is that you used to could pick whether, if you amended a return, you could pick whether you wanted it refunded or whether you wanted to use it as credit on future tax. Now, this stuff here we're talking about, the ERTC, is you had to, in order to get a check, you had to fill out a form called 7200. Now, she put out yesterday that the deadline for filing that form was February 1st. Is that right?
If you wanted to file it that way and ask for a credit on kind of a one-page request form, that was correct. But if you missed that window, and we're past that window now, the 941X to amend the 941 is now required. The 7200 form, we can't use it anymore for 2020. Now, we can use the new one for 2021, and those credits should be able to go through. I don't know if I'm going to say faster, because it all goes to the same place, right? It all goes to the IRS, and they still have to process everything.
And they're backlogged.
Yeah, and they're very backlogged. But the 7200 is one page, whereas a 941X right now it's 4 pages. So I think the 7200 for 2021 is a little easier.
I'm encouraging people to go ahead, see if you qualify. See if your wages are down. If you were shut down or partially shut down, you know it. I think your explanation helped me in the definition of what partially shut down is. So I want to especially thank you for that, because we were concerned. Even if you're not going to get a check tomorrow, because it doesn't look like you're going to, know that it's out there. At least get it filed.
Yeah, get it filed. And unfortunately, it's going to be a wait. And the credit will come back to you in the form of a paper check from the IRS coming through the regular mail. So
snail mail.
It will, snail mail. So this is all going to take some time to really process. Now, 2021 credits could be applied towards your current payroll taxes, and you could choose to take advantage of it that way if you would like to, but you need to be absolutely sure that you are qualified and that, the math is all done correctly. And I would recommend to people who are just at that 20% cusp, like they're fully open and they're not quite sure if they're going to be 20% under, go ahead and get through the quarter and do your books for the quarter, then take a look at it, and then take advantage of the credit. But if you are partially closed in 2021, you can still take advantage of it as you go. So taking advantage of the money right now might be the way to go for folks who absolutely know they qualify today.
Tricia, I want to thank you for dumbing it down for me in layman's terms, because I'm out of pocket. I'm not doing this every day now. You've been so helpful, and I want to thank you so much for coming on the show today. Now, I know there's more details that you could go into that we could talk for hours and people's eyes would just glaze over. So what is the 3 biggest things you can tell the listeners right now what to do about this stuff?
Contact your payroll professional. If you don't have one, you can reach out to Payroll Vault, of course. At least touch base with your accountant or tax attorney. Just find out if you qualify. Don't assume that you don't. Take a look at, payrollvault.com. If you click on our blog link, it's right there at the top. It's just a very general summary about who qualifies. That might help you through. And if you find that you do qualify, go ahead and send it in. Have somebody help you through the numbers and file your amended returns, and go ahead and send it in. And hopefully the backlog will catch up and businesses will be able to really take advantage of this money coming back to them.
Do you guys have a lot of information on the website? And if you can, tell people where to find Payroll Vault.
So it's payrollvault.com. And once you get to our main page, right on the top of the page, we have a blog link. It's one of the menu items. Just click right on that. And the first item that comes up is the employee retention tax credit. There's a little video from me that's just a 2.5-minute little summary. And then we have a written summary on how, and we divided out 2020 versus 2021, how you qualify and what you'll need.
Well, we do a cheers on this show. My cheers for today would be to Payroll Vault and you and your team. Taking business relationships and turning them into friendships for looking towards everybody's success.
Cheers to you, and cheers to 2021, and hopefully getting back to somewhat normal as soon as we possibly can.
Hey, and everybody, share this with your other friends and business owners. People need to know about this. The government has money they're wanting to give you if you qualify. See if you do. Tricia, I love you. Thank you so much.
I love you too. You're very welcome.
Bye.
Have a good day.
You too.
Bye.
Please be sure to subscribe to Cheers to Business podcast on iTunes or anywhere else that you get your podcast. Visit our Facebook and be sure to give us a like. And if you have any questions or topics you'd like us to discuss, shoot us an email from the website cheerstobusiness.com.